Okay, here we are. Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn. Now, earlier this week in a previous live stream, we were talking about airline travel and whether people would fly or drive with these higher fuel prices. So I checked with AAA. AAA predicts that 39 million Americans will travel for Memorial Day, which is just a couple weekends away, up from 8.3% last year. 34 million will drive by car or some other vehicle. 3 million by air, so they'll fly. And 1.3 will take a bus or a train or actually take a cruise out into the ocean, in a very scenic place, I'm sure. So there's a little information to go with our conversation we had earlier. Now, let's talk about today. Back up a moment. Before we talk about today, do the quick take about what happened in the market today, why it happened in the market today, what to expect for tomorrow first. Then I'm going to answer your questions, and that's my favorite part of the video. We're going to do that at the end. So get your questions ready. And, if you do ask one before the end, that's fine. I'll still stop to answer the question, because that is the most important part of this video. Making sure that you get a breakdown of what happened in the market today, why it happened, and what to kind of expect for tomorrow, and then your question answered. That's this entire video. That's what it's for. Okay, so let's talk about today and what happened in the market today. And, just to kind of close out right quick on the AAA numbers, that's year over year compared to last year, 2021, right? When there were still some people in places and regions that were locked down. If you were to compare that to 2019, pre-pandemic, we're not quite at that level yet. So just a little clarification there, I guess I should say, on the AAA information that I got. Okay, let's talk about today. The S&P 500 declined 0.5% on Thursday as risk sentiment remained pressured by underlying growth concerns in this downwards trending market. Let's look at the S&P 500 on the chart. That's what you see here. This is the daily chart. You may see that there is a new line on the chart. There's this black line going diagonal. It starts all the way over here in July of 21, and I'll just circle that right here. It starts here. There's a support resistance area there that gets broken after a V shape, just a quick test the 50-day moving average and then pop right up. And then it also connects right here, which is the bottom that we had in October of 21, so still last year. But then it connects to our second significant low of the year, where many people went and bought the dip there. That would be February the 24th. Okay, so how does this line up, right? Well, let me zoom in. Well, okay, I'm going to take volume away. There, volume's gone. Now we can see it better. I'm going to take the other markers away at the bottom. I have to do this first. There. Now I'm going to zoom in over the past few days, and you can see my circle here from February 24th, that low. And if we travel through that black line, what do we find right here? Okay, we find that on May the 13th, which was last Friday, this line pretty much capped where the market closed. And then, and then if we look on Monday, the 16th, well, the market kind of hung around that line, right? We burst through it on the 17th, and then we drop and sink through it yesterday. Today, we get nowhere close. The market is pretty much flat today. 0.5% flat compared to these other days we've had. So this line is interesting. It's acting not as a support line, but it's acting as a resistance line. So right here is that resistance. So when we come back up for air in our next relief rally, whenever that may be, likelihood of it being tomorrow, probability is probably against it. If we could not clear the hurdles to bounce back today after losing big yesterday, I don't think that we can bounce back big tomorrow. But I do not have a crystal ball, and I'm not 100% correct. Okay. Well, I should rephrase that. I'm not 100% right. I always try to give correct information. Let's put it that way. All right, so a new line there, and I find it interesting. Now, here's where it gets really interesting. I'm going to change the view. This is a daily view. I'm going to go to a weekly view. And now let's look at this line. Okay? Same circles are there. I'm going to zoom in. All right, so we got this cluster where it starts over here. It starts on July the 12th as a resistance day. And then we come to October of 21, and we get 3 bounces off of it, so it acts as support. February the 22nd. So this is a weekly view, right? So this is the week of February the 22nd. It bounces off of that line. And then we get here. Now, I need to take that last line that I put on this chart, last circle, that is, when we're on the daily view. I need to move that so it's a little clearer. Here's where we are on that line. Okay, so if we go to the 9th of May, which is the first or second week of May, it acts like support, just like it did back in February and October. But March 16th, which was last week, which is this week, my apologies. March the 16th, this week, we get rejected off of this line. Rejected. That means it's acting as resistance, keeping us down so we cannot rise further. I find this very, very interesting indeed. Now, we know that the S&P 500 on the weekly chart, we've looked at it before, even earlier this week, we're down now 1, 2, 3, 4, 5, 6, 7 weeks in a row. We have been down on the S&P 500. Nearly 2 months, the S&P 500 has been falling. And now we get resistance this week, where just last week we found support. I find that fascinating, very fascinating. Now, this purple line here that starts on the week of January the 24th, which was the first real low of the year of 2022, and then the week of February 22nd, which is the second low of the year. And then here, March the 9th, where we had the third low of the year, and it bounced right off that line, and this line is lining up perfectly. I do believe we are headed for this yellow box, folks. And for the S&P 500, that's somewhere around 3835. And we're not far away at 3,900. That's where we sit right now, 3,900. So 3835 is not far away. And once we reach that point, 3835, that would be 20% down from the high set during the first trading week of the year, which started on January the 3rd. That would be 20%, which means we would technically be in a bear market. Now, we already feel like we're in a bear market. 20% down, it feels like we're already there. We're sitting at 18.1% down on the year, not from that, well, I guess we could technically say from that high. The high happened one day after. So we could say 18.1% down year to date. We are almost at 20, which would technically be a bear market. But since we've been falling for 7 weeks in a row, I mean, in the whole year we've been falling, it feels like. We had a nice snapback rally for 3 weeks, which was really just 2 weeks, because the third week it barely moved. So it feels like we're already in a bear market, but technically not yet. Technically, we're in a correction. Okay, I wanted to show that new line to you on the chart so we can get that nailed down and understand what's happening here. We're finding resistance. That means the market is weak, and we know the market is weak. We get red flashes all over the place showing the market is weak or weakening, which isn't going to be good for the future. Short term, right? Okay, so this is being down 7 weeks in a row. That is a hard downtrend. Now, the Nasdaq today fell 0.3%. Let's pull the Nasdaq up here, and I'm going to keep it on the weekly view for just a moment. That's the Dow Jones. Here's the Nasdaq. The Nasdaq is in this falling wedge pattern on the weekly chart. Okay? Weekly chart. And we've got also 1, 2, 3, 4, 5, 6, 7 weeks in a row that the Nasdaq has been falling. Now, the Nasdaq is already in bear market territory. It is down 27.2% year to date. And it's in this falling wedge. It could continue falling. I have no problem believing that the market could get down to 11,000. I have this red line right here at 11,200 because I think that's where it's going. But it could go lower. Now, the Dow today, it slid 0.8%. I'll put that up here, and then you'll see instantly on this weekly view, the Dow right here has been falling too. And this top resistance line, it matches up perfectly. Now, this bottom line, it's not perfect on the weekly view, but if we go to the daily view, whoa, we have ourselves a very nicely formed, even though it's ugly because it's going down, but we've got ourselves a trading channel. Even though it's going down, we have ourselves a defined trading channel. Meaning, if the market wants to keep falling and keep going, I've got to adjust this a little bit so we can see the line. We could get down to 30,600 quite easily from this 31,250 that we're at right now. So very, very defined trading channel there on the daily. I'm going to go back to the week for a second because I want to pull up, excuse me, I want to pull up the Russell 2000. Now, the Russell 2000 was the sole winner. It gained 0.1% to close slightly higher today, which is cool. Now, it still has a red candle on the weekly view because that's where we're at right here. But on the weekly view for the Russell 2000, this is interesting where it ended today. And this is why I'm looking at the weekly chart. And I know I don't typically look at the weekly chart, but the weekly chart does give you a more, a grander bird's eye view of trends. Okay. The candle closed right on the 200-day simple moving average for the Russell 2000 today. I think that's interesting that it's there for the week, right? It was slightly below it yesterday, but it's pulled back up, and now it's back above that 200-day simple moving average. That could turn out to be a support place for small caps. I know there's a lot of small caps that have been doing really well. My SoFi has been doing great. The Russell 2000, it's down 20.8% year to date. So there's the Russell 2000. And then I can also put this trend line right here to show. There we go. To show this resistance line, we have we've got 4 touch points. One here, the wick breaks through. That's an anomaly. And then we have number 2 and then number 3 touching it. So that's the resistance line there for the Russell. So you can see it's got a long ways to go before it can even come back close to touching that line. All right, let's go back to the S&P for just a moment. Now, even though we had the markets down today, Bitcoin and Ethereum both did well today. Bitcoin was up 5.2%. It's above 30,000. And Ethereum was up 5.2% as well. It's also back above 2,000. So that's good for 2 good things for crypto there, with Bitcoin and Ethereum moving in a positive direction. Okay, moving on with today. 8 of the 11 S&P 500 sectors did close lower in a choppy back and forth seesaw session today. Consumer staples down 2%, information technology down 1.1%, and industrials down 0.9%. They were the sectors with the weakest performance, while the materials up 0.7%, consumer discretionary up 0.1%, and healthcare up 0.2%, are all worthy leaders that eked out a bit of a gain today. Now, growth concerns were reinforced by another batch of disappointing earnings reports and economic data, in addition to elevated oil prices. Yes, oil climbed today 0.5% to $109 a barrel. Now, remember, all of this charting that we do, you can do at home too. There's a link in the description of this video to TradingView. Click on it. Sign up for a free account, free to use. We can look at oil by going to US OIL. And that takes you to the WTI crude oil. That's what the markets watch. Now, $109 a barrel. That's where it closed today. You can see it. Now, on the weekly chart, you can see that it is in a trading channel. Now, when I go back to the daily here, you can totally see that trading channel, okay? And it is moving up, unfortunately. Now, oil today did hover around $110 a barrel, but thank goodness it did close back below that, which is a good thing. We want oil to come down. I don't think it's going to come down below $100 a barrel anytime soon. Again, I don't have that crystal ball, but you know, that's the setup here. And it does not look like it's going to do that. Now, oil is still in this trading range and it's ascending. We can see that yesterday it tapped out at resistance and came back down to, 2 days ago. Today, back up. Wait a second. Hold on. I got to get my days right, okay? All right. 19th, which was yesterday, we had the gain. The 18th, the day before that, that's when we had the drawdown from resistance. And then on the 17th, that's where it was flat and barely moved a muscle. Backing up to the 16th, that's when it rallied up to this resistance point here on the stock chart. Now, we've got a double resistance right here. It'll be interesting to see if it doesn't fall back down and get down to $103, $102 a barrel and then march back up. If it marches back up from this point is it going to break above this price resistance area, which is right around $114 to $115 a barrel? Hopefully that holds and sends it back down. I don't want to see oil that high because that just wrecks everybody. And that's not what we want to see. Now, I shared with our investors on Patreon this morning that there's going to be, I really don't want to say it, but there's going to be further fallout in the stock market as investors grapple with weakening growth concerns. We can see it in retail right now, even though the retail report was good, but that's looking in the past. Retail reporting earnings this week, their earnings are missing, which are again looking in the past, and their guidance, which is looking in the future, is being lowered. So this market, it's got nowhere to go, really, but further down. And I don't want to say it, but I've got to be honest about this. And those growth concerns that are expected to translate into weakening earnings concerns, and that has not been adequately accounted for in current earnings estimates. That market, this market right here, this is the S&P again. I went back to it, snuck it in there on you, making sure you're paying attention. But this market has further to fall. Now, if you would like this valuable content to help you along your investor journey, then come join us by clicking the first link in the description. Now, just look at Cisco. They reported yesterday. CSCO is the ticker symbol for Cisco. Horrible earnings report, down 14% after missing revenue estimates and issuing downside quarterly guidance amid persistent supply chain issues, which helped to hold down the Dow Jones today. Bath and Body Works, this is going back to retail. BBWI is the ticker symbol. Bath and Body Works down 6.7% today. Retail that's doing bad. Look at Target, TGT, retail doing bad. Look at that huge drop. Now, there were two bright spots, and I think it might have had a little bit to do with some short covering. But Kohl's, ticker symbol KSS, and I know retail investors do play around with Kohl's. It was up 4.4% today. That's retail, and look at the earnings that they reported today. An 84% miss on EPS and a 5.7% miss on revenue. But it was up 4.4%. And then you have Children's Place. Ticker symbol is PLCE. They reported earnings too. Look at this earning. EPS missed by 26%, revenue missed by 9.5%. But it was up 10.4%. A little short covering and a little retail playing with it is what got it up. So do be careful of the minefields out here in retail. The not retail investors, retail stocks like these that we just looked at. This 10% can vanish instantly on Children's Place. Their earnings did not support this. They ended up in the green here, and I just explained why. Now, even so, just like Bath and Body Works, these are the latest retailers that issued disappointing earnings and disappointing guidance. Again, adding to the growth concerns. There was continued bleeding in Walmart today. They lost another 2.8%. WMT is the ticker. Aqueductly. I got it. Aqueductly. I can't believe I messed that word up. It happens. I love it. Oh, that's where you get fun words. Walmart, again, losing today, right? And Target, we did pull that up already, but I don't think I mentioned that they were also down again today, 5%. So retail is getting hammered. And when I talked earlier, and what I sent to investors on Patreon earlier today, talking about this weakened growth that has not been priced into the market yet, we can see it here on these individual stocks. Walmart, Target, Bed Bath & Beyond. We can see the damage being done to the individual stocks, and it is making a difference. Going back to the S&P 500, SPX is the ticker I use. I mean, you can see that in a 0.5% or 0.6% fall today in the S&P 500. So it's making a difference in the indices, but not a huge one yet, not yet. When you look closely, I mean, the candle for today, I mean, it has barely moved. It's about there on the bottom in the middle of your screen. Let me fix this a little better. There we go. Right about the middle, off to the right of the middle of your screen. That last candle for the day. It's a very small one, barely moved. Now, it did have some movement. That's why the wicks are there. But from open to close, half a percent, 0.6%. Now, both Walmart and Target stoked profit margin concerns this week. And I'm glad that other investors are finally waking up to this. We have been talking about it here on this channel for a long time. The second half of this year is going to be worse than the first half of this year because of slowing growth. The consumer has remained strong in the first half. The consumer is being weakened right now, and the consumer will be weak in the second half of this year because we can't continue to pay these higher prices. Eventually, we're going to have to start cutting something out. So this was just another drag on sentiment that discouraged dip buying efforts today as well. And on top of that, Citigroup downgraded Union Pacific, which their ticker symbol is UNP, CSX, and that's their ticker symbol, and Norfolk Southern, which is the train company that runs through my area here in Northern Virginia. Their ticker symbol is NSC. They downgraded the railroad stocks. They downgraded 3 of the railroad stocks from neutral, to neutral from buy. Well, is the supply chain getting worked out? Because a lot of companies are reporting supply chain issues are still occurring. And the railroads are a huge part in getting supplies moved from one place to another. Are there just not supplies to move from one place to another? It's an interesting, and if you have some time, you should read it. I should grab it and put it in the link of this description, the description of this video, so you can read it and see why they're downgrading railroad stocks. Now, another retailer struggling, and they reported after the market closed today, is ROST Stores. Ticker symbol is ROST. ROST Stores. They reported, again, after hours. They missed. EPS was off by 3 cents, which is 2.8%, which looking at some of these other ones isn't as bad. They also missed on revenue, 201 million or 4.4%. But their guidance, their comps were actually down a negative 7%. And they guided their they guided their next quarter, Q2, below estimates. And then they also guided their fiscal year 23 below estimates. And this one, it dropped 22.7% in the after hours. Another retail stumbling. And we were expecting this. This is exactly what we were expecting. Even though retail came in looking great on the retail report earlier this week, but again, that's backwards looking, not forwards looking. Retail is sinking right now, which could provide some opportunities, but just not yet. ROST also issued downside, I already mentioned that, downside guidance for next quarter and for the fiscal year 23. All right, let's talk about something happy for a moment. Let's talk about cybersecurity. Because Palo Alto Networks, they reported after the bell today. Ticker symbol is PANW. What do you think? Did they do good? Not so good? They did good. They did. They did really good. And they did so good that they're helping to lift up other cybersecurity stocks. Now, Palo Alto reported a beat by 11 cents on revenue. On EPS. And they guided Q4 EPS and revenue above estimates. And if we pull it up here on the tab, you can see the 11-cent beat here, which was 6.7. And then revenue was pretty much flat. It was up 2% or 28 million. But the estimate, they came in at 1.38. The estimate was 1.35. So real good on earnings. But this continued, or this carried, this 10% rise in the after hours from closing down 0.5% at $436 to now up 10% to $480 a share because of this good expectations ahead for the next quarter. Now, revenues rose 29.1% year over year, which is great growth. And that was 1.39 billion for that revenue. Q3 billings grew 40% year over year to $1.8 billion. And they also issued upside guidance for Q4. And then, like I said, other cybersecurity stocks are up in relation to Palo Alto's good earnings, like CrowdStrike and Zscaler, for example. CrowdStrike, I like them. They are a little expensive. CRWD is CrowdStrike's ticker symbol. I believe they were one of the ones up the most, up 4%. And plus, they were up near 3% on the day, and then up another 4% in the after hours. So this is great for CrowdStrike. I do own CrowdStrike. I like CrowdStrike. And then Zscaler, ticker symbol is ZS. They also were rising. What did they get? 4.3% in the after hours. And their earnings are another week away. CrowdStrike has earnings coming up too. So cybersecurity, that's a bright spot in the market. And it should continue to be a bright spot. As companies continue to digitalize everything, well, you need cybersecurity to protect that. So these companies aren't going away anytime soon. The thing is about, look at Zscaler here for just a moment. It has fallen pretty hard. Let's see what it is for the year here. It's down 58.8% year to date. Can you believe that? Nearly 60% just in 2022, it has dropped. So you still have to be careful, even though this is a bright spot in the grand scheme of the market. You do have to be careful. Okay, enough sunshine and smiles and rainbows. We got to look at Applied Materials, because I know a lot of retail investors like looking at this company. They make wafers for semiconductors. You wouldn't have NVIDIA without Applied Materials. Ticker symbol is AMAT. I like Applied Materials, just so you do know, and I do own it. I like to say that whenever we're talking about a stock, so you know I'm being transparent about it. So down 0.5% during regular session, down 2.3% in the after hours. Now they missed EPS, and we can pull the card up here so you can see it. They missed by 5 cents or 2.7%. Revenue was basically flat. They missed by 103 million or 1.6%. So pretty much flat. They did guide EPS and revenue below expectations for the next quarter. And during the earnings call, AMAT, or I shouldn't say AMAT, that's their ticker symbol if you want to read it that way. Applied Materials complained about component bottlenecks. And they said that they started to smooth out a little bit. They were a problem, started to smooth out a little bit. Maybe they could see that later this year that maybe this bottleneck would open up. But then the COVID-related shutdowns in China happened and just made that bottleneck even worse. So there's no light here yet at the end of the tunnel for supply chain disruptions. And one of the key issues is shortages for silicon components that they use in their parts, and other parts that go into the subsystems of their tools, like the wafers that they build for semiconductors. Now, regarding demand, though, the outlook is wonderful. Applied Materials is completely booked for 2022. Completely booked. They have no more capacity for this year, which is really great. I mean, demand for semiconductors and what makes semiconductors is going to be huge for years to come, kind of like cybersecurity. But orders for 2022, yep, they're done. They're all booked. Now, unconstrained demand for wafer fab equipment is estimated at $100 billion or more right now for Applied Materials. That's huge. $100 billion? They pulled in $6.2 billion. They need more capacity. That's what they need. They also said on the earnings call that their customers are building out more capacity. So I hope they follow suit and do that too. Now, expectations are that within the industry, there's a clear path to $1 trillion semiconductor market before the end of this decade. Yeah. There's a clear path to $1 trillion industry, semiconductor, by the end of this decade. That is awesome. And that would represent a high single-digit compound annual growth rate from today. All right. So there's a few individual companies that I wanted to chat about today. Let's talk about the Treasury market right quick. We'll start with the 2-year. US02Y on TradingView. The Treasury market today. It was a very strong indicator of the underlying growth concerns in the market today, as demand drove yields lower across the curve. The 2-year declined by 7 basis points to 2.61%. In the 10-year, let's look at that. US10Y is the ticker. The 10-year declined by 3 basis points to 2.86%, where it closed And now it's down a little bit more in the after hours. And the 10-year did touch 2.78 earlier in the wake of the weekly claims and the Philadelphia Fed index releases. Yeah, caused it to go lower. People were rushing to safety, buying bonds. You know, bonds have been just rising because nobody wanted to touch them. Now everybody wants them. They're all jumping in this week. They see what's coming. These investors see what's coming just like we do. Just like you and I. We're on the same page here. Now, looking at today's economic data, we had the initial claims for the week ending May 14th. Yes. It increased by 21,000 to 218,000. That remains a low number historically. But relative to expectations, it was a disappointment. Continuing claims for the week ending May 7th, however, decreased by 25,000 to 1.317 million. Now, the key takeaway here is that it covers the week in which the survey for the May employment report was conducted. The relatively low number of initial claims will support an outlook for another strong month of non-payroll gains. Now, moving to the housing market, yeah, we love the housing market, right? And we know the housing market is showing cracks in its foundation. We know it. We can see it. We got existing home sales data today. And guess what they did? They decreased by 2.4% month over month for the month of April to a seasonally adjusted annual rate of 5.6 million units versus a downwardly revised 5.75 million units in March. The key takeaway is that the supply of available homes for sale remains extremely tight. Yet higher mortgage rates and home price inflation are contributing to a slowdown in buyer demand, rooted in affordability pressures that are expected to be persistent. And like I continue to say, and like I said earlier, the housing market is showing cracks. It is weakening. And it will come down. I just hope by the time prices come down more to reality, that mortgage rates aren't sky high. You guys know that we've been looking for a house. It just didn't work out. Got priced out of the market. Oh, well. But prices are coming down. Probably by the end of this year, we'll see prices down for the housing market. But I don't know that availability is going to increase significantly. I just think demand is going to start drying up. People are going to feel stuck. They're going to feel like they can't do anything about their situation. They're going to feel like, you know, we wanted to move. We wanted a bigger yard. We wanted an extra room. But we got trapped. And unfortunately, it's a tough situation because the housing market does move slow. It's like a bureaucracy. It moves slow. Let's see here. Sir, I have a request to please make a video on Palo Alto, okay, and cybersecurity sector. Yeah, no problem. Let me pop that up there. I can definitely do a video on Palo Alto networks and cybersecurity as a whole. As a matter of fact, with the earnings coming up, let me see when Get my cursor back. Let me see when CrowdStrike's earnings are. Another shortly. Another 15 days. Okay. I definitely want to do a video on CrowdStrike, but I don't want to wait. I don't want you to have to wait 15 days to get a video on it. So I'll do a video on Palo Alto Networks and other cybersecurity, what's happening for the industry. And then I'll do another one in a couple weeks here when CrowdStrike reports its earnings, because definitely want to dig into those. Okay. Let's see. What else? I think that's it. Oh, like I said earlier, if you would like this valuable content to help you along your investor journey, then definitely come join us by clicking the first link in the description. I'd love to see you there. Okay, I have definitely reached the part where I have finished talking about everything that I wanted to cover. If you did learn something today, do me a favor and click that like button. That really helps. Also, sharing this video, and if it's your first time watching, subscribing to this video, those really help out this channel. This is a small channel, and I'd like to do this. I like doing this, and I would like to continue to do this. But we definitely need your support to keep this up. That is for sure. Definitely need your help to continue this. So if you could do those quick things, that would be greatly appreciated. And then, of course, join us on Patreon. We're growing over there. Lots of tons of valuable information gets released over there. We've added a new pre-market and still trying to work out the timing there, because I got to, write the sucker and then, get it published out there. And I got to make sure that I start early enough that I get it published in time before the market actually opens. So I'm still trying to work my timing out on that one. I did go a little later than I wanted to today. And then we also did a midday market kind of breakdown of what's happening. It's kind of cool to do those too. So we've added that. Lots of tons of information. And it all comes from what you guys are requesting. So if there's something that you want us to cover, then that's the direction that we go. I love doing this. I love answering your questions. Absolutely. Apple, do you want a video on Apple, or since you were just talking about that? Or you want to talk about Apple now? We can talk about Apple now. I'll pull them up. AAPL is the ticker symbol for Apple. Let's see. Do you think the market has priced a 50 basis point rate hike for next month? Yes, absolutely. The market has priced, because during the May meeting on the 3rd and the 4th, they said that in June, July, we would get 50 basis point rate hikes. Now, the June meeting is the 14th and 15th. Write that down. The July meeting is the 26th and 27th. And then there's a September meeting on the 20th and 21st. Now, they hinted at a possible 50 basis point rate hike then, but I am not 100% confident that that's what they said. But I know they said June and July we'll get 50 basis point rate hikes, and that has been priced into the market. Hands down. Definitely. The September one, I'm not so sure about. To answer your question there. All right, let's talk about Apple. So Apple is a big beast, right? I mean, this thing moves the market when it moves. Where's the market cap at now? It's down to $2.22 trillion. It's a behemoth. Now, if we're looking here technically at this setup for Apple. Right where it's at right now, this price point. It is getting awfully, okay, so look here on the chart. We got Apple. This is where Apple is right now in this red circle. And if we follow this path, we can see there was support right here just above where it is now. And then we go back, let's see, that was October of 21. And then if we go back to May of 21, we've got big resistance. February of 21, more resistance. We did have that euphoric rise and then fall right down below it again. And then back here in December of 2020, we had resistance. And then back even further, September of 2020, another euphoric run, and we hit resistance there. So what am I seeing here? I'm seeing a lot of reaction points somewhere around $230 all the way up to, I'm sorry, did I say 230? $130 up to $140. There is a bunch of reactions within that $10 area, that $10 zone. And we can't go back any further for this zone than September of 2020. And that's the first time Apple ever hit it in its history. So when we're looking here, I'd want to see it hold in this zone. And if it could stay above 130, as a matter of fact, I'm going to put a red line here in the sand at 130. Because if it broke this red line of 130, then it could, looking at the chart here, I mean, it could come down to like 125 pretty easy after that point. And then 120, that would be the next real strong support area. So I see good support in this zone, 130 to 140. Many reactions in this zone. So I'd want to see Apple hold there. I would take nibbles of Apple in this zone. Remember what we talked about a few live streams ago. Right now, don't take on big positions, right? Small positions. Nibble a little bit here and there as these prices are dropping, because the prices can come down more. And I don't want to say we're dollar cost averaging, but that is what we're doing when we're taking on these smaller positions. We're just dollar cost averaging down, which is okay. So in this 130 to 140 zone, nibble. Previous resistance has shown as support here. Yes. That's why I'm dropping down below it. All of these resistance lines, they're at 135 to 140 on the chart. And then the support is once they reach that 135 to 140 area, they come back down to 130, 131, and they bounce off of that, and they have support there. That's what I see on the chart. Let's go in a little closer to make it a little clear. Let's look at right here in the middle. So this was a time where it ran up. It hit resistance right here, and this is right at 135. One of the days it was able to break above it and get up to about 137 where it's at right now. And then it comes back down. It found support here, and that was 131. It found support here. Where is this at? This is at 131 again. And then support right here. And this is 131. And then it sank down below that. So it had lots of support before falling back below it. And when it fell below it, that's when it would get down to the 128, 127 area. Let's look at this next one here. I learned my lesson on SoFi. I'm spreading it out after the lucky bounce. It worked, but I nearly lost my mind. Yeah, SoFi would something. 125 for Apple, that would be a sweet one. If Apple would get down to 125, and it could, but it's got a lot of reaction points here at this 130 to 140 zone. But if you look right here, middle of the screen, this low that it made was 116, but the support, which is all through here, this support is 120. So a lot of support at 120 right there. And let's go back to after it fell here before its rise. There was a support line that ran kind of like this, straight across there. And that's at about 123, 122, right there. And let's go back here. Support lines here. And this is the 126. And then I don't think that peak really had any support. It was just a rally. But when it did come back down, I mean, this is, wow, 104. Wouldn't it be great to get Apple at 104? All right, so there's breaking down those support resistance areas. So it's in a zone right now. 130 to 145 has support. 135 to 140 was resistance, but old resistance can become support all the time. So looking at Apple right now, sitting at 137, you know, it could come down to that 135 area and find some support. Then again, it could slip right past it. So what I would be watching for, and what I am watching for, is 130. As a matter of fact, here's what I would do. Let me, and I'm going to do it right now. I'm going to set a stock alert at $135. Once Apple breaks that, then I know to go look at the chart. And then I want to follow it closely. I want to see how it reacts and what happens when it gets to 130. And I'm going to set another stock alert for $130. Because if it breaks that, then I want to watch it closely and see how the market's doing. Is Apple continuing to fall? Could I potentially get it for 125? Because if it does break this 135, 130 zone, the bottom part of this bigger zone, then it can definitely go to 120. So when we're charting, nothing is set in stone. It's all about probabilities. And when I see an area on the chart that has a ton of reactions like this, in this 130 to 140 zone, then you know that there will probably be a high probability of many reactions within that zone. However, I'll use this as an example. There were many areas in between 145 and 150, $5 range, there were ton of reactions within this, support and resistance. But then if you look right here at what happened, it really didn't hold up at all. It kind of just fell right through it. There were a few reactions, and if we go in here a little closer, you can see it kind of stalled just a little bit here at that, but then it just kept going. So that's what I'm watching for. Within this area, is it going to stall, peter out, and then fall through like it did up here? Or is it going to catch and hold some real support here? So the probability is high that it'll find support here. Let's see here. I'm going to nibble and watch these levels. Thank you. You are welcome. You are welcome. All right. We have been running for an hour and a minute. So if you have questions, I'll give you a few minutes here to ask. Put them in the comments. Otherwise, we'll wrap it up for today and then hop on tomorrow after the markets have closed. I'll just clean up this chart a little bit while we're giving you that time. And remember, if you did find value, if you like the content, definitely click the like button. Definitely click the subscribe button and click the share button. And then if you really like this content and you think it can help you along your investor journey, then click the first link in the description. I'd love to see you there. I believe there's a lot of value over there with all of our investors on Patreon. All right, just trying to clean up my circles here that I made. Any other questions? I'll take them now. Tomorrow, I think, is a flip of a coin on whether we're up or down. The market has more room to fall. I just don't know if it's going to fall all at once, or is it going to fall little bits at a time, stall, have a little relief rally, and then continue. But do remember that this is option expiration week, which typically leads to the market going up. So that could be providing some level of support, keeping the market kind of flat today. And letting the Russell 2000 rise. So we could potentially see a flat market tomorrow. Maybe it's green tomorrow. It is Friday. And we know that many traders don't like to keep positions opened over the weekend because anything can happen. Thank you. You are always helpful and you are always appreciated. I love you guys for coming here and asking questions. Absolutely love it. You are appreciated, and I am glad that you are here. I'm glad that you are learning, and I'm glad that there's value that you can get from this. Absolutely. Just remember, if you're just starting out, you don't have to go in all at once. Cash is king right now. Keeping cash on the sideline, and I know we're in a high inflation environment, but don't let the talking heads on TV tell you that your money is going to be worthless. Don't have cash. Put the money to work for you. Yeah, I mean, it's all good, but you're not losing value when stocks are going down, because you're able to take that same $100 and buy more stock as the price continues to come down in the market. So cash is king right now, and there's a lot of cash on the sidelines just waiting for this market to bottom. Thank you. Just joined the Patreon the other day. Awesome. Greatly appreciate that. Definitely let me know how you like the information that we put out over there. I think it's tremendously valuable. It helps me, so I just want to share that to help you all with it. All right. Well, if there's nothing else, we can wrap it up. Just remember, small sides, be patient, don't jump in. There's time. You can be patient. And sometimes that's hard. We want to put our money to work for us. So we want to buy stocks. We want to invest that money so it grows. But in this current environment, patience is very hard, but it will pay off big time. Because like I said with that $100, if there's a stock out there that costs $100 and you have $100 and you're buying one share right now, what happens when that stock drops to $50? Your $100 is now worth $50. But if you would have been patient and held on to that cash, now you could have 2 shares. And when the market finally does rebound and find its footing and reverse, you'll have more gains in the long run. So patience is key right now. If there is a rally like we had earlier this week, right? We had a couple green days this week. Don't feel like you've missed out and you have to chase the high. You don't. Be patient. Okay. Well, if that's everything, we'll wrap it up for today. I'll be back here tomorrow after the market has closed to break down what happened tomorrow, why it happened, and what we can do to plan for next week. And man, I absolutely love doing this. It is just awesome. And I'm so thankful for each and every one of you. Every single one of you is appreciated. Just remember that. Okay, ladies and gentlemen, thank you for watching. And we'll wrap it up here. And I'll see you tomorrow evening for another live stream. All right. Take care. Have a good night. And I'll see you in the next video.